All right, welcome back to AI for 2021 Finance Summit presented by Data. Our next speaker is Bayan Bruss. He's Director, Applied ML Research at Capital One. Please join me in welcoming him to our virtual stage.
Thank you, Patrika. It's very nice to be here. As Patrika mentioned, I am the Director of Applied Machine Learning Research in Capital One's Center for Machine Learning. And what we do is we really investigate what are the next areas of machine learning research that are going to be impactful to financial services. And then taking those, we build them into production systems so that we can really accelerate the adoption of this new and exciting innovation in machine learning in financial services. And so what we're going to talk about today is one of those areas that we see as very promising and very exciting. So this is applying machine learning to graphs in financial services. And so we're going to cover three main topics in the presentation. We're going to cover graphs in finance, machine learning on graphs, so how do you actually do that machine learning on those graphs, and then some of the graph machine learning research that we've conducted, some of the systems we've built, and then share some of our conclusions on this topic. So without further ado, I'll dive into it. So let's start with graphs in finance. It's a really interesting area. And for those of you who don't know what a graph is, it's basically a network. Those two terms can be used interchangeably. So when we think about graphs or networks, we actually find that in finance and financial services, graphs are everywhere. You just have to look for them. So for instance, if you're a lender, customers can be connected to the lenders by their loans. And so you can have a customer that's connected to a different lender by a mortgage, by an auto loan, by a credit card. All of these different types of linking of lenders and customers can be viewed as a network or a graph. If you have credit card transactions, you can also view them as connecting merchants and accounts. And so here we have a network. I mean, these are obviously all stylized networks. These aren't real networks. This is an example where you have merchants and accounts, and every time an account shops at a particular merchant, it's adding strength to a relationship between that merchant and that account. And so that's adding an edge or a link between those. And those linkages create this really interesting network of accounts and merchants. This is referred to as a bipartite graph because accounts and merchants can only be connected in this particular one way. Accounts can't be connected to other accounts through credit card transactions. Another example of graphs in finance are in banking. And so, a lot of us have bank accounts. We have transferred money through wire transfers or using apps like Zelle or some of these other money transfer apps or ACH. Each one of those transfers, whether it's paper or electronic, constitutes a directed edge on a particular graph. And so here you have a graph, a stylized graph of accounts connected to other accounts based on the money that they transfer from one another. And so you could say, account E transferred money to account A, and account A and B transfer money back and forth to each other. The types of information that you can encode in these graphs is actually quite powerful. You can have information like how much money there was, the type of transfer it was, whether it was an ACH, a wire. And so you can actually start to encapsulate a lot of the core information in financial services in the way that you represent your data as a graph. And so that actually becomes pretty powerful if you think about it, because it can be used in a variety of use cases all across the customer lifecycle, whether that's identifying based on where customers are in that network, who to target for particular marketing campaigns, who to acquire or try to acquire as new customers. You can use it to detect fraudulent behavior or anomalies on those graphs. You can use it for customer management and improving the servicing of the customer's experience. And you can use it for things like customer resiliency in financial services and collections. And all of these become really interesting applications of these networks that you now have created from your data, which you may have traditionally not thought of as networks or graphs. But how do you do that? That's actually, not is easier said than done, especially when you want to build models on top of these graphs. So this is where we get to the idea of machine learning on graphs. And so let's take a step back. If this were easy, we would have been doing this for decades, right? We've been building models around customer behavior for many, many years now. Why haven't we been building models on top of these networks that we can observe from our data? Well, one of the challenge is when you're working with graphs is that they tend to be extremely high dimensional, meaning there are often millions of nodes, millions of customers, millions of merchants, millions of possible entities in these graphs. And then the more nodes there are, the more possible connections there are. So there can be billions of edges on these graphs. So that really high dimensionality is often quite challenging for traditional machine learning techniques. In addition to that, it's extremely sparse, meaning that any given node in your graph tends to only interact with a very small subset of all the possible nodes that they could interact with in the graph. So these types of high dimensional, very sparse data sets tend to be extremely challenging for traditional machine learning. This is where recent advances in graph machine learning enables you to overcome these challenges and apply machine learning directly to the graph that you have. So, interestingly, much like traditional machine learning, graph machine learning has a variety of approaches depending on the context, the data, and your objective. So you have, the more traditional graph mining. So this would be used to analyze structural properties, identify groups with similar patterns. You can even do it for some types of anomaly detection. And then you have the three different types of more graph machine learning, which are graph representation learning, which tends to be fully unsupervised. So the idea of graph representation learning is, can you take this extremely high dimensional, extremely sparse network, and can you encode it in a much lower dimensional, very dense space? Think of like a vector, something that tells you the position of the node relative to all other nodes, in such a way that the topology of the network is retained in that new encoding. And so that these types of unsupervised tasks can be really powerful in making it easier for you to do downstream machine learning tasks on the graph. There's also semi-supervised and supervised machine learning techniques that you can use to actually do predictive tasks directly on the graph structured data. And so unsupervised learning tends to reduce the dimensionality and restructure the data so that it's more amenable to traditional machine learning, whereas semi-supervised and supervised graph learning do so in a way that it's applied directly to the graph. And the way that they work is in various forms. Semi-supervised learning propagates information from a small subset of labeled nodes to the rest of the graph, whereas supervised learning takes the structural position as well as node attributes to make a prediction about either the nodes or the edges. In addition to being able to do these types of tasks, structural information can actually be quite powerful just to provide you customer insights. So you can do things like community detection, finding similar nodes through shortest path detection and node importance, and propagating information from neighbors. And here you can have an example of a network of auto dealers. And so you could say, looking at this, you start to understand that there's some actual structure to this network. You can see there's a very focal node, a dealer of very high importance. And then you have these smaller network sub-communities within this broader network of similar dealers that can help you with things like marketing or servicing, et cetera, just by understanding what is the structure of this network that we're looking at and understanding our customers and our partners. If you have access to node labels or attributes that you want to predict about, say, customers, if your customers are the nodes in your graph, you can actually do supervised machine learning directly on the graph for end-to-end modeling. So you don't have to engineer features from the graph. You can actually provide the whole graph directly to these models. And the way that these exciting models is that as you're making the predictive task, they're aggregating the information from the neighborhood of the given node, in addition to that node's features, and it's making a prediction about that node. And so let's talk a little bit about what's been done so far. So those are all the possible techniques that you can use in graph machine learning. Some of them are more cutting edge. Some of them have been tried and true for many, many years. Let's talk a little bit about what we've done at Capital One. So one of the things we think a lot about is how do we work with credit card transactions? We have this really rich data set of credit card transactions, which represents the shopping patterns of millions of people, of our card holders, which is really an interesting economic and behavioral data set. And so, but we want to understand how can we use those credit card transactions in downstream machine learning models for things like fraud detection and customer servicing and personalization. And so one way we wanted to do this is by applying unsupervised graph machine learning. Because we have so many different applications that want to use these credit card transactions, we thought, let's encode the graph in a way that a number of tasks can use them. And so what we did is we applied unsupervised graph machine learning to the graph of accounts and merchants based on their credit card transactions. And how did we do that? So we take this bipartite graph. As I mentioned earlier, a bipartite graph just means that you have two different node types. And here we have merchants and accounts. And we weight the edges between them based on the frequency of the transaction. So these really thick lines represent the fact that this particular account shops at this particular merchant very, very frequently. And thin lines represent weaker relationships between accounts and merchants. And we use that weighted bipartite graph to project into two separate graphs, one of merchants and one of accounts. And so the way that that works is by saying, if two merchants have the same customer, they will be joined by a linkage. And that the strength of that linkage will be relative to the strength of the relationship between those two customers that shopped at both of those merchants. And vice versa. If two accounts shop at the same merchant, they will now be joined by a linkage. And so here, say account A and account E both shopped at the same store. Now they have a link between them. Once you have these new homogeneous graphs, then you can do a type of graph embedding that relies on what are called random walks. A random walk is essentially you start at any given node in your graph and you just move from one node to the next, choosing randomly from the set of nodes that it's connected to. So to give you an example, D here can randomly walk to either B, A, or F. It chose to walk to B, and then it chose to walk to C, and then it chose to walk to F. And that's just a random choice for each one of those. But if you do those random walks enough, you're actually sampling from the neighborhood of every node in your graph. And those sample sequences can be passed into a neural network model that can learn to generate a low dimensional, in this fictional case, a two-dimensional representation of each of the nodes that represents their relative closeness to the nodes in the original graph. And so here in this fictionalized example, you can see A and B are connected on this graph. And so A and B are in this two-dimensional space actually close to each other. So the distance, the graph distance is preserved in the low dimensions. And now you can use those low dimensional, these two-dimensional representations as, say, two dimensions or two features in a downstream machine learning model if you want to use the position of those nodes in the graph as inputs to subsequent models. And so what this enables you to do, interestingly, is it takes that very high dimensional, as I mentioned, graph, and it encodes the structure of the graph. And that structure is often interesting. It's very semantically meaningful, and that semantically meaningful structure can be used in a number of downstream tasks. And so here we have an example where we took that credit card transaction graph, we projected it into these lower dimensions, and then we connected the nodes in these lower dimensions. And what that revealed to us is that there was this implicit structure in the credit card transactions. And here, every single node represents a merchant. And we then ran community detection on this space. And what we found is that the communities actually ended up representing types of merchants. And so travel agencies were very close to each other. Interestingly, travel agencies and airlines were connected adjacently to hotels and restaurants, right? And then hotels and restaurants were connected adjacently to food and vendors. And so you can see not only is the structure is preserved, but it's continuous in this space. And as you move through the space, it becomes informative about what type of merchant you're talking about. And so that type of semantic encoding becomes really, really powerful for things like fraud detection. And you can imagine that if somebody only shops at a specific type of merchant and suddenly they shop at a merchant way over here, that's actually pretty easy for a machine learning model to figure out. And so, in conclusion, this provides some really powerful evidence that natural graphs abound in financial services. We have a ton of possibilities for how we can use graph machine learning in financial services. They provide a unique and very high value look at customer behavior, at merchant behavior, even basically at economic behavior. At the same time, they present a lot of unique challenges when seeking to apply machine learning. And we really have to look to the forefront of what's coming out of academia and industry labs to see how can we actually implement these types of graph machine learning techniques on the real data that we collect in financial services. And so if you're curious, we've actually published a number of papers on this topic. I'll leave those here. You can look us up, and thank you for your time.
Awesome. Thank you so much for sharing with us, Bayan. That was amazing, and we really appreciate your insights. All right, for the audience, it's time for you to make your way to your next session. Along the way, make sure to accept your connection request, as well as check out our awesome AI exhibits. Thanks so much, and we'll see you around.